Right, well, thank you. Good afternoon, everybody. I've got a presentation that I think will probably take about 20 minutes just to talk through. I will be posting it up on my website afterwards, so there's no need to sort of scribble down anything that I'm saying. It's as much as anything, of course, it's just markers for me to talk through. And then I'll be leaving, therefore, a good 10 minutes for Q&A at the end, so we can have a discussion about some of the issues raised. So this is what I'm going to talk about. I'm largely approaching the issue of COVID and the tricky question of valuing human life from an economics perspective. So there will be a fair amount of economics in my talk. I appreciate that everybody on the call is economics, so I'll avoid jargon or at least explain it as much as possible. But I thought I'd start by just explaining the economics of a pandemic, both the sort of microeconomics and the macro. I'm then going to talk about the tricky issue of whether we should put a monetary value on a human life and how we might do it. I'm then going to use that as a starting point for talking about the ways that you might do a cost-benefit analysis of the lockdowns that we've had, and also the debate that we're having this weekend and early next week about whether or not we should delay the so-called Freedom Day, the lifting of the remaining coronavirus restrictions. And then I'm going to talk about some of the longer term economic impacts of COVID, both bad and potentially a few small silver linings as well before the Q&A. But to kick off, for sort of microeconomics point of view, what are the reasons that might justify the state getting involved in dealing with a pandemic? Can't it just let people sort it out for themselves and private companies do whatever consumers want them to do? Well, a number of sort of so-called market failures that might justify the state intervening. The first is that the protection that you can get from a deadly virus like COVID is what economists call a public good. What that means in particular is that the benefits that people get from being protected from this virus are probably larger than private companies can charge for, because it's not possible to exclude people from the benefits of society as a whole having, for example, herd immunity. So if it were just left to companies to provide vaccines, then they probably wouldn't provide enough because they can't charge for all of the benefits. It's also a good example of what economists call a negative externality. So that's where my behavior has some sort of negative impact on your well-being without that actually affecting me in any way. So for example, if I'm running around with COVID and I infect you, then that hurts you without necessarily hurting me. So there's a negative externality there that it might be worth the government trying to prevent. Some of the things that we usually rely on to protect people against shocks may not apply here. So it's very difficult for companies and individuals to insure themselves against something like a pandemic that shuts down the entire economy. There are some forms of business interruption insurance, but they're quite expensive, and it's been hard for people to get insurers to pay out there. And finally, there are lots of big transaction costs involved. So yeah, in principle, you could say, well, that those companies that are not able to operate during the pandemic should just simply shut down and then restart again. But that's really expensive to do. Closing and reopening businesses is expensive. Firing and then rehiring people is expensive. So it's quite a good case for the government to step in and tide people over, for example, through the furlough scheme. So even if you're a sort of free market liberal like I am, you might still think there's a role for the government to play to step in and support the economy during a pandemic. In terms of the macroeconomic impact of the pandemic, this is very unusual. Obviously, we've had this huge slump in economic activity as measured by GDP, and normally that's considered a disaster. But in a sense, it's sort of inevitable that the economy will shrink during a pandemic, and possibly even desirable. What I mean by that is the idea that you actually want people to stop doing what they would normally be doing in terms of, going to the shops and spending money or going to work, traveling on public transport and so on. You want them to stop doing that in order to protect the lives of themselves and others. So the policy focus has been different. Normally we try and prevent recessions. This time around, instead of trying to stimulate growth, what we've been trying to do is shield the economy. while it's been put in a state of temporary hibernation. So there's been all this money thrown at things like the furlough scheme to protect jobs, cheap loans to businesses, top ups to people's income, whether that's people that can't work as normal or the self-employed who might be earning less than before. So there's a lot of money thrown at shielding the economy during the pandemic. But that does mean it should be easier for the economy to rebound as and when the restrictions are lifted. And that indeed is what's been happening. The economy has actually recovered quite strongly. And indeed, each individual lockdown seems to have had less impact than before as the economy has adjusted. Now, one issue that brings together all of those points and is very tricky, this idea of whether or not we should put a price on a human life. This is a very sensitive topic. In the early stages of the pandemic, lots of people, journalists like Toby Young, for example, were writing about this, and they were roundly criticized. People seem to be countering that that we shouldn't worry about how much it costs to save human lives. We should be willing to pay whatever it takes. That's unfortunately not how the real world works. Health economists have always had to try and put a value on a human life when, for example, appraising the benefits of new medicines for the NHS, or whether or not we should spend a large amount of money making a certain road safer. One particular technique that's used is something called the QALY, which bases the value of a human life on the number of years that somebody has left to live and the quality of that life. So that QALY here stands for quality adjusted life year. This isn't, by the way, about anybody's earning power or economic potential or contribution to the economy. A rich person's QALY is the same as a poor person's QALY. Instead, it's about using limited resources in the fairest way. If you're still uncomfortable with that approach, there are a couple of examples, a couple of thought experiments that I use to illustrate that. Suppose, for example, it might cost £1 billion to prevent just one premature death. Would you think that's worth it? And I think almost everybody would say no. But once you've conceded that principle, of course, we're then just arguing about the numbers. What if it's 100 million or 10 million? We need some sort of figure to decide a threshold at which we would decide it's worth spending that money to save one life. The other example is the Titanic example. So suppose you had the ghastly job of allocating the last seat on a lifeboat as the Titanic is sinking, and you've got a straight choice between rescuing a healthy child or a sick old man. Who would you save and why? And again, in my experience, almost everybody would save the healthy child. And of course, that's the principle of women and children first that was applied at the time of the Titanic sinking. So implicitly in making that judgment, you are, if you like, following the QALY approach. You're saying that somebody with longer to live and those years being healthier, their life is worth more in some limited sense than somebody who is older and infirm and might have less time to live. So in answer to the question, should we put a price on a human life? Well, unfortunately, sometimes we have to, simply to decide how to allocate resources in the fairest way, and other policy decisions as well. I think inevitably it is important to the policy decisions about COVID that the people who are most vulnerable tend to be those who are elderly or with underlying health conditions. And I think it would be odd not to take that into account in making decisions around the pandemic. So turning on to how you do cost-benefit analyses of lockdowns, this is extremely complicated. Normally these things are quite straightforward. There might be one or two things on the cost side and one or two things on the benefit side, and they might be reasonably certain. Neither of those things is true in the case of lockdown. So lots of different costs and benefits, and some of them are highly uncertain. But if I start with the benefits, you've got the most visible thing, though that itself is hard to measure, which is the reduction in illnesses and deaths from COVID itself if you lock down the economy. But there are also other potential benefits. You've got the prevention of other deaths that might happen if the NHS is overwhelmed with COVID patients. So this isn't just about protecting the elderly who might be most vulnerable to COVID, but it's also protecting young people who might otherwise not be able to get into A&E because it's full of people who are suffering from COVID. As it happens, the lockdown has also reduced some other diseases like flu. The number of flu cases has dropped off rapidly because people aren't going out or they're wearing masks if they do. The impact on the reduction in economic activity is interesting. There's actually some evidence that a reduction in economic activity also reduces the number of deaths because, for example, there are less traffic accidents when people going to work or traveling around. There are fewer work-related accidents. So recessions can actually reduce the number of deaths in other ways. And then very importantly, there's the idea that if you lock down the economy in the short term, that might cause a big hit, but it produces a longer recovery stronger recovery in the longer term because you get on top of COVID. So there's a short-term hit, but longer term benefits from locking down. Against that, there are clearly some pretty big costs of any sorts of restrictions. You've got, again, the most visible ones. So you've got the hit on economic activity. So that's businesses that can't open and might have to go bankrupt. You've got job losses and so on. You can top up a lot of those things with government spending, but that has a long-term impact on the public finances as well that you need to take into account. You've also got all the softer, harder to measure things might be less visible that are also at least as important. So you've got the harms potentially being done to people with other conditions. So that's things like cancer patients who aren't receiving the care that they need if they're afraid to go to hospital. You've got all the costs that we're increasingly aware of about mental health and well-being of people not being able to do what they would normally do. You've got specific harms to young people in particular, the damage to people's education and job prospects from lockdowns. And then you've got a whole host of issues around things like civil liberties and trust in government, harder to measure, but very important. People don't like being told what to do by their government, particularly if they don't think it's necessary. And all the images that we've seen of police stopping people from meeting in parks and so on. There are sort of definite benefits there that might not be easy to measure in economic terms, but they are lost if we can't live our lives as we'd normally do. So these things are very hard to assess. One particular issue that's worth exploring a bit further is this point about the trade-off between health and the economy. And I think there's definitely some sort of trade-off here between preventing premature deaths and protecting incomes and jobs, but it's not as simple as saying it's either health or the economy. For a start, if you didn't lock down the economy and if the virus isn't controlled, then people might choose to stay at home anyway, and the lockdown, the economy will be hit anyway, even without a lockdown. You also can't necessarily judge the value of lockdowns simply by looking at the number of people who die or are hospitalized while the restrictions are in place. A lot of people have done this, but it's misleading. What you need to know is how many people would be ill and hospitalized if the lockdown wasn't in place. That number could be a lot bigger. That's the difficulty of what economists call assessing the counterfactual. And finally, there's the point I made already about locking down harder and sooner might increase the short-term hit to the economy, but reduce it in the longer term. So that's the idea that maybe the trade-off isn't between health and the economy, it's actually between the short term and the long term. Turning to the immediate decision about whether or not we should delay Freedom Day, I think there are strong arguments on either side. And I think this is where, as an economist, I can accuse of doing the on the one hand, on the other. But I think it's important to recognize that, both sides have a point. It is inevitable, of course, that we will get a surge in cases whenever restrictions are lifted. So we have to accept that's gonna happen. Whether the restrictions are lifted sooner or later. In favor of lifting the restrictions sooner, it does look like the vaccines have weakened the link between infections and hospitalizations, which is the really most important thing. But they don't seem to have broken that link completely. And the new variant, the Delta variant, the Indian variant, does seem to be more easily transmitted. So even if it's still only a small number of people who are being hospitalized, a small number of hospitalizations as a percentage of a very big number, which is the people that might now be catching COVID, that could have a significant impact on the NHS and therefore on all of us, not just those who are most vulnerable to COVID itself. In terms of the economy, it's worth stressing that the sectors that are most severely affected by the current restrictions account for a relatively small part of the economy. It's probably less than 5% of GDP, and lots of them are already open to some degree. So you can still go to the pub, restaurants, and so on. You can't go to a nightclub, but lots of other things that you can do. And also, when thinking about the impact on the economy as a whole, of course, you may not be able to go to a nightclub or to holiday abroad, but you can still spend that money somewhere else in the economy. So, you can have lots of outdoor picnics and so on, whatever else it is you might want to do. So the impact on hospitality might be partly offset by benefits and spending elsewhere in the economy. But I think it's important not to downplay the impact on hospitality and other vulnerable sectors themselves. For many of these businesses, it could be the final straw. These are businesses that have only just survived up until now. They might be open now, but they're not very profitable. They really need the numbers of customers through the door that currently are being prevented by the social distancing restrictions and other COVID barriers. Also, if we do delay Freedom Day, then that might prolong the uncertainty and damage morale. So all those sort of softer things I was talking about earlier in terms of the impact on civil liberties and our family and social lives. The impact on confidence, though, I still think could go either way. I mean, there are plenty of people who are worried about the surge in COVID cases, and they could actually be reassured if we did delay for a little bit longer, particularly if it's for the specific purpose of accelerating the vaccine rollout. So it will be a time-limited delay to Freedom Day for a specific purpose. I think that's far better than simply saying, well, we're not going to revisit Freedom Day at all. We're going to be held in limbo for the foreseeable future. It might also be more damaging to reopen now and then have to shut down again later. So it might be better to pause the easing of restrictions rather than lift them all now and then have to go backwards. So I think there's a reasonable case for saying that a temporary hit from delaying could be a price to pay to secure a stronger economic recovery in the longer term. But many people will disagree with that. I think many of my colleagues in the IEA take an opposite view. And it's certainly the case that if we do delay, then we're going to have to chuck a lot more money at hospitality and other vulnerable sectors, everything from nightclubs to wedding planners to tide them over, particularly over the next few weeks when they were hoping to have been open. So that's a sort of mixed view. I'm slightly sitting on the fence, I know, on Freedom Day, but those, I think, are the issues that the policymakers will need to take into account. More positively about the economic fallout from COVID, it's worth stressing that the economy has, as I say, already rebounded pretty strongly. We're only about 4%, probably now about 3% below pre-COVID levels of economic activity. That's partly a tribute to the efforts that the government has made, so protecting businesses and jobs during the pandemic and making sure that the vaccines are rolled out as quickly as possible. But also, just as important, I think it's a tribute to the flexibility of our dynamic market economy. So the economy itself has adapted without necessarily any help from government. So the way that lots of us have been able to work from home, the way that a lot of retail has migrated online, and their companies have worked really hard to make sure they can still serve their customers in very difficult circumstances. The way that unemployment has remained low. So yes, we've lost lots of jobs in some sectors, and others have only been protected by furlough. But equally, we've created lots of new jobs in areas like online delivery drivers and so on. A couple of other positives. One is that household savings in aggregate have risen sharply. So lots of people have seen their incomes fall, but they've seen their spending fall by even more. So there's a big pot of money waiting to be spent to drive consumer spending. A similar story actually on businesses. Most businesses have actually built up quite a lot of cash during the pandemic that they could then use to invest in new machinery and equipment, in employing people and so on. So as and when the uncertainty of COVID and also the Brexit uncertainty lifts, then there could be a big rebound in business investment. And one potential positive, a small silver lining for the economy, is the way that things have been shaken up so much, sort of a process of creative destruction, if you like, the ways that we've all found new ways of working, at least those of us who can change the way that we work, which might provide a bit of a boost to productivity as things are as we build back better in some sense after the recession. Thinking about the other aspects of the longer term, I mean, one big concern is how we're going to pay for all of this. And it's certainly true that there's been a huge surge in borrowing and debt. A lot of people are saying it's inevitable that taxes will have to rise to pay this down, or they're going to have to be big cuts in public spending. That's not actually quite right. I mean, in fact, the government never actually has to pay back debt. In fact, it very rarely does. It's a good sort of quarter of a century since the government actually ran a budget surplus and paid back debt. As long as the government continued to meet the interest payments, debt can simply be rolled over. The absolute amount of debt also matters less than how it compares to the size of the economy. So as long as we continue growing the economy, then debt becomes less important because it shrinks as a share of GDP. And it also helps a lot when interest rates are relatively low, as they are now. And in the meantime, there's no great pressure from the financial markets to tighten fiscal policy. They're quite relaxed, lending large amounts of money to the government, and if necessary, the Bank of England can pick up some of that through its asset purchases under QE as well. So there's no need to panic about the debt numbers. The best way to reduce the burden of debt over the longer term is a combination of some decent economic growth and maybe a little bit of inflation. That is the way that we will pay for COVID, not big tax increases or spending cuts. Finally, I just want to say a quick word about inflation. This is something that is becoming a growing concern, and I think actually that is something to worry about. A little bit of inflation isn't a bad thing. If anything, as I say, it can help reduce the burden of debt. But inflation has a nasty habit of sticking around and creating lots of losers in the meantime. So, if we have 4 or 5% inflation, but lots of people are only getting 2% pay rises or no pay rises at all, then clearly their spending power is being cut. So I think it's a good case there for the Bank of England ending its asset purchases under QE sooner rather than later. And that's another reason to be skeptical of all the calls that we're getting from people like Biden at the G7 that governments should be spending loads of money left, right and centre. That's doubly risky, both because of the risk of inflation, but also because there's only so many worthwhile projects around. And if every government in the world is trying to spend loads of money, then that will not only push up inflation, but also will probably mean that lots of that money is not very well spent. So I think it is right to worry about inflation. And that is another argument for the state rowing itself back again, rather than remaining permanently bigger after the pandemic economic shock is over. So just some brief conclusions from me before we go to Q&A. Sometimes, unfortunately, we do need to put a monetary value on a human life, and there is a sense that some lives may be worth more than others. It's a very limited sense, but it is a valid point to make. As I say, I think the real trade-off is between the short term and the long term, not necessarily between health and the economy. As far as government policy is concerned, I don't actually think the government needs to do an awful lot more now. The economy is already rebounding as the brakes are taken off. So I think the government should be looking to step back now, rather than to continue maintaining anywhere near levels of intervention that it has done during the pandemic. But that's going to be, I think, the big debate from now on. There are lots of people who've got used to the idea that the government can spend and borrow lots and lots of money with no consequences. We are starting to see those consequences come through in terms of bad decisions and higher inflation. But once people get convinced themselves that big government is the way ahead, it's very hard to row back against that. And that's one of the big challenges that the IEA and other more free market oriented think tanks are going to be facing in the future. So at that point, I'm very happy just to move on and take any questions.